Thank you for tuning into Bloomberg Quint. Today we are now joined by the joint MD and CEO of JSW Energy, Mr. Prashant Jain. Prashant, first and foremost, thank you for speaking with Bloomberg Quint. First, on the operational performance, it was far better than what was expected by the analyst community. What are some of the key factors that you would attribute which led to this kind of performance?
So two things. Number one thing is that the performance of our subsidiaries have been exceptionally well. In case of our hydro projects, we saw the lifetime high generation. In case of hydro, our PLF was 79% as against 68% in the previous quarter, and performance of our Barmer plant was also exceptionally well. However, the performance of our the merchant units were not to the expectation, primarily due to the high imported coal prices. But on the other front, we took various key initiatives. One initiative which we took was to reduce the O&M costs. O&M costs went down by 18% during the quarter. Second initiative we took by the refinancing and reduction in the interest, which went down by close to 8 or 9%. The third thing which we did was also to reduction in the debtors from 84 days to 71 days. So, and we feel that this trajectory will continue in terms of the key initiatives which we have been taking. So that's how we see that we are quite optimistic going forward for our existing business.
There was a big announcement made by the company that you are going to enter into the electric vehicle space. Can you give us some more details on this, on the cost aspect? What timeline are you looking at? What are some of the key products that you're looking at actually?
So I cannot tell you about the products at this point of time. It's too early. But what I can tell you is that JSW Energy board has approved to foray into electric vehicle business, as well as the associated energy storage systems and charging infrastructure. We aspire to launch our first car in 2020. And this will be a car which will be designed for Indian consumers, for Indian roads. And we will be starting with probably more than 50-60% localization, and we are looking at various states where we will be setting up this manufacturing facility. And for battery manufacturing facility also will be set up, and probably we will be importing the lithium ion cells and then doing the module assembly as well as the battery manufacturing and battery management system will be done within India, and it will be both for mobility as well as the static application. And we will be doing the third-party business also. For static application, we will be also looking for telecom, for solar rooftop. So that's what is the whole idea.
How about the timeline and the costs involved?
So total project cost, what we are envisaging is close to 4,000 crore, and this will be spent over a period of 3 years. This we will be funding by way of debt and equity. Equity could be close to 1,500 crores, and which will be funded through internal accruals.
All right. Coming back to the power business, do you have any visibility with regards to the signing of PPA with the Karnataka government?
So, unfortunately, the rains in Karnataka had not been good this year, and because of which there is a power shortage once again. It is happening, and we are expecting that Karnataka should be coming for a short-term PPA very soon. And we are based in Karnataka, and our plants are very, very competitive, and we feel that if the short-term PPAs are announced by the government of Karnataka, we will be able to grab a good share in that.
And are you looking to acquire any stressed assets as of now?
So we continue to remain interested in the stressed asset because power is our core business, and that's where we continue to look for the growth opportunities. And we see some of the good interesting opportunities where, if we can get those opportunities at the right valuations, we would like to capitalize on that. And at this point of time, we have not zeroed down anything, and we are keenly watching the space, but we continue to remain interested.
One last question from my end. Can you give us some guidance for FY18 with regards to the average tariff that is going to come in?
So at this point of time, we are close to 65% is our long-term tied up, and I can give you a guidance that by end of the year we will be tying up close to 75% of our capacity bill for long-term. And for short-term, I don't see that probably the guidance has any kind of a meaning, because the merchant tariffs are lower, and if there is a short-term PPAs are done, they are done by the competitive bidding, and as and when that bidding happens, we will be certainly informing you.
Sure. Thank you so much for taking the time out and speaking to Bloomberg Quint.